There's a trap in the financial markets that almost 95% of traders fall into. A subtle one, not created by brokers, not caused by news, not even by sudden market moves, but by the traders themselves. And the worst part, they don't even realize it. It doesn't appear clearly like a false signal. It's not a typical market manipulation. It's an invisible loop, quietly eating away your account, your time, and your confidence. That loop has a name: the confidence trap after small wins. Everything usually starts harmlessly. A trader opens a few small positions. They feel relaxed, no pressure, no fear. They follow their plan, stay disciplined, respect the stop loss, take profits properly, and then, the results are better than expected. A streak of winning trades appears, and the trader begins to feel, I get it now. Maybe I've finally figured out how the market works. The strategy really works. That belief grows stronger, until one thought appears. If I just increase my position size, I'll make even more profit. Doing the same thing. So the trader increases the size. At first, everything seems fine, but soon after, the next trade doesn't go as planned. The market moves differently. A candle spikes the other way. A sudden pullback hits the stop loss, and the account balance drops faster than ever. Then come the emotions. How could that happen? I did everything right. No way, maybe it was just bad luck. Frustration, doubt, and pride start to mix. The trader wants to win it back immediately. They refuse to accept that they've lost control, and that's when the revenge trades begin. From here, things spiral fast. One loss turns into 2, 3, 5. The account shrinks. Fear grows. But the trader can't stop. They no longer feel calm like when they traded small. Every candle makes their heart race. Every pullback feels like a knife twisting inside, and eventually, the account blows up. Then comes the deposit. Then a new beginning. Small trades again. Small wins. Confidence returns. Position size increases. Then, another big loss. And the cycle repeats. Over and over again. The scary part is, 95% of traders don't even realize they're stuck in this loop. They think the problem is in their strategy, their indicator, their time frame, or their entry point. But in reality, the problem is psychological. When traders trade small, they win because they feel calm. When the risk is small, the brain doesn't feel threatened. They're relaxed, able to follow rules, stick to the plan, accept normal losses. But once the position size increases, everything changes. The fear of losing money appears. Traders stop accepting stop losses. They move them further away, hoping the price comes back. They take profits too early because they fear losing the gain. They enter trades emotionally instead of logically. And just like that, they break their own rules. The trap isn't in the market. The trap is in how you react when real money is on the line. Think about it. When you trade demo, or with a small amount, you're almost always right. You analyze clearly, you wait patiently, you execute perfectly. But once you increase the capital, once you go all in on a sure setup, you turn into someone else. You're no longer calm, you're no longer rational, you're just a scared trader, and the market senses it instantly. The market has a cruel rule: it will always test your emotional strength before it rewards you. If your psychology is weak, it will take everything back no matter how good your system is. But if your psychology is strong, you can survive with almost any system. So, how do you escape this loop? There's no quick fix, but there is an effective one. Step 1. Accept that the problem isn't your method. Stop changing indicators, stop jumping between systems, stop chasing new strategies. Instead, look inward, watch how your emotions shift as your position size changes. Ask yourself, how do I feel when I trade small? How do I feel when I trade big? When I lose a large trade, can I stay calm? If the answer is no, then you already know where the problem lies. Not on the chart, but in your mind. Step 2. Identify the capital level that feels psychologically safe for you. That's the level where you can lose a trade and still stay calm. No anger, no revenge, no regret. That's your emotional comfort zone. Trade at that level for a long time. Long enough until you can control your emotions completely. Long enough until you no longer overreact to wins and losses. Only then should you consider increasing your position size. And when you do increase it, do it slowly. If you're trading 0.01 lots, move to 0.02 and stay there for a while. Observe your emotions. If you stay disciplined, good, keep going. If you start feeling fear or cutting profits too early, go back. You're not mentally ready yet. That's how real trading psychology training works. Not through fancy courses, not through reading more trading books, but by watching yourself in every situation. When you win, observe your reaction. When you lose, observe your emotions. When your account grows, see if greed appears. When it shrinks, see if you feel the urge to fight back. Do this long enough, and you'll begin to understand yourself. And once you understand yourself, the market stops being your enemy. It becomes a mirror, reflecting your emotions back at you. Remember this, the market doesn't destroy you. Your uncontrolled emotions do. No trader ever loses because they lack a good strategy. They lose because they can't follow it when emotions take over. When you blow up an account, don't blame the market. Don't blame your system. Ask yourself, am I repeating the same mistake, just in a different situation? If the answer is yes, then you're still in the loop. And trust me, there's only one way out. You have to break one link in that chain. There are two ways to do it. Option 1, keep trading small forever. Accept small profits but keep your mind stable, safe, but you'll never scale. Option 2, train your psychology until even after a big loss, you can stay calm. No revenge, no chasing losses, no doubting your system. That's the true mark of a trader who survives long term. Trading is a game of psychology and self-awareness, not indicators or strategies. Those who win over time aren't necessarily smarter. They just know when they're most likely to make mistakes, and avoid them. If you're still listening right now, you've probably been in this loop, and maybe you still are. But don't worry, the first step to escaping it is recognizing it. And today, you just did. Next time you trade small and start winning, remind yourself, don't let confidence turn into a trap. And when you feel like increasing your size, ask, am I truly ready mentally for this amount? If the answer is not yet, stop right there. Are you caught in this loop? Leave a comment and share your story. I'd love to hear your experience.